So investors should care.
Correct.
Let's talk about market impact. It's been a couple of weeks, interesting weeks. We can start from globally, then we come to Africa. What have you seen?
So the theme has been similar.
Yeah.
It's you know, they say when the United States cough, the rest of the world catches a cold. Yeah.
Yes.
So the impact, especially now that it started in China,
yes,
it was, again, as I said, it was regarded as a China-centric infection. When it got out, everyone started now to panic. Eventually, it got to the States. They believed they were immune. It got there, and within 48 hours, 2 people were dead. And now we're talking about 27 plus people in America itself, with more than a dozen states being infected. So that has taken a brunt on the market, especially the equities market, which is regarded as the riskier asset to hold.
Yeah.
We've seen the Dow, the S&P 500 both fall more than 16% since early February to now.
Yes.
We're talking about globally, we've lost, I think, 217 trillion globally.
Dollars.
Yes.
Yes.
So it's bad. We've seen
$217 trillion dollars.
Yes, has been wiped out. If you're talking about Kenya, on Monday alone, we lost 167 billion Kenya shillings.
67 billion.
167 billion
on
Kenya shillings on Monday.
On Monday.
Yes.
Yes.
So the effects have been severe. We've seen the US trying to come up with measures to try and contain it. They've dropped their rates by 50 basis points. They've pumped in 150 trillion Kenya shillings to the economy just on yesterday evening, the day before.
Yes.
And now investors are still pricing in for more help from the government here. Yeah. So we are expecting rates to go to the negative zone.
Yes.
In the US.
Yes.
If you go to Europe. For the first time
yes.
in a long while.
Yes.
So if you go to Europe, I mean, they cut their rates as well. Go to Germany, you're talking about negative yielding for the 30 year. You go to UK, again, they cut, and now they're becoming more cautious about this. You look at the FTSE 100 in the UK, lost, I think, more than 10 basis points in a day. It broke the circuit breakers, even so in the US on Tuesday. So, all markets are really suffering the world over. In China, I think in Asia as well, we've seen stimulus packages from Hong Kong, Japan, and South Korea. People just promising to support the markets.
Yes.
People promising to act so that we can do away with the panic.
Yes, yes.
Because it's nothing, it's not about the quality of the stocks or the stock market. No. It's more about the panic and how guys are treating those markets. So we've seen those support. Closer home, again, as I mentioned on Monday, 167 billion wiped out on Monday.
One day.
In one day.
One day.
If we are to compound that for a week, I think by now we might be talking close to 600 billion wiped out, especially on the fall today in stocks. Yeah.
Yes.
And of course, again, to drive up my point is the panic around it. Yes. Now we've seen a Kenyan case confirmed. Should more numbers, should this escalate over the weekend, you anticipate to see another sell-off on Monday, yeah? Because now it's now closer home. Yes. It has come home.
Yes.
So there's a significant wipeout in shareholder return. Yes.
Value.
Yes.
What about other African countries?
I mean, if you
look, Nigeria, Egypt, South Africa.
At the old share index in Nigeria the other day just lost, I think 8% when when they reported their first COVID case.
Yes.
And they've been more hard hit than we have been, because now again, remember, they're a net exporter of oil.
Yes.
So when the OPEC nations did not agree on the production, we saw another 10% hit in Nigeria.
So it's been a series of bad news.
It's been a series of bad news for them.
Yes.
We are better off because at least the oil war is favoring us. We are a net import of oil.
Yes.
For them, on a budget that is heavily dependent on oil, it became quite some bad news for them.
Yes.
If you go to South Africa, I think the only sector that's been performing well has been the commodities, especially gold. Yes. Because those are the safe haven assets. Yeah?
Yes.
If you look at their markets, a market that has more than 560 listed stocks, a market that is more than 20 times our size, it's also been a bloodbath. So no one has been spared. They of course also reported a case. So those two nations, if you look at them, they've been crazy. Another considerable nation to look at is Egypt, where they lost 16% after they recorded their first case. I think they're the first African to record a case.
Yes.
You move, they go to Algeria, where they reported 17 cases. The market went down close to 20% in 1 week.
In 1 week?
Yes. So it's been crazy.
That's what we've just begun today in Kenya.
That's what we've now just begun. Of course, we started with a panic, and because 75% of FDIs was being taken out. Now we've started our first case. So the question is, will we replicate what we've just seen in Africa, Most probably, yes.
Yes.
So next week could be another red bar.
Would be an interesting week.
Could be an interesting week
Yes.
for investors.
For investors,
It's time
yes.
to keenly watch the market.
Yes. We've spoken about the equities market.
Yep.
Any views on the fixed income market?
So again, over the last, since the COVID started,
Yeah.
we saw, again, internally we also have the flight to safety. And our safest, I think, asset in the country is currently the government bonds backed by the Sovereign Republic of Kenya. Yeah? So the yields have actually been coming off in some of those, on some of the papers.
Okay.
Again, guys are mainly interested, insurance investors are interested in the short to mid term. Insurance, of course, are looking for the long ends. So the yields generally across the board have been coming off. That means your bonds have become more expensive because guys who are moving from the, especially we moved, say something like Safaricom, when we moved from the 30s to sub 30, we saw that shift. Guys who are just, you know what, let's take our profit or let's respect the stop loss, let's move to the fixed income. So we've actually seen that that move to fixed income quite much, yeah.
Okay.
Yes.
So who are making money in the fixed income?
So people will make money on the fixed income, correct, yeah.
Are we also likely to see the cash deposits going up?
Correct. I mean, the other investment, if you're going to follow Warren Buffett, is you're happier holding cash.
Yes.
For two reasons.
At such times.
At such times.
Yes.
One, to time the market if you can.
Yes.
Catch it if you can.
Yes.
And you're going to get some cheap stocks to buy.
Yes.
So that's advantageous for you.
Yes.
The other thing is people, of course, the USD becoming the global currency.
Yeah.
We've seen this shift of guys converting and buying the USD. I think we've seen that spike of the last 2 weeks, more so because it's a safer currency to hold. It's a currency you can transact with globally. And of course, we saw central bank coming into the market claiming over the next 4 months, they'll be buying dollars. So again, currency has become the place to be.
Yeah.
You know, your basket of 7 currencies are the best to hold.
But
right now.
talking about currency, how the local currencies behaving?
The USD has been fairly stable,
Yeah.
to be honest. I think there was a report out late last year where Kenya topped Africa in terms of the exchange rate to the USD.
Sure.
We saw countries, especially that devalued. You're talking about your Egypt, you're talking about your Nigeria.
Yes.
You know, we saw those currencies really taking a hit on their local currency. Kenya actually emerged. I think it was the only currency that was positive last year, and it has been so, I think, for 2
That
or
was
3
before
years.
the COVID.
That was before the COVID.
Now
yes.
with COVID.
Now with COVID, we've been fairly stable. We
Yes.
haven't seen it slide. We've only seen it slide after the CBK came out and said, you know, we're going to be buying dollars from the market.
Yeah.
And it's a very temporal slide because you're talking now about 102.35 from levels of 101. So it's just 1.2 shillings up. And that is expected to be short term because we know the nature of our central bank is that when this thing goes out of hand, they'll come back to the market to support it. So I mean, our currency has actually outperformed most expectations.
With FDI's living, is
the
it
conversion?
If this pressure sustains,
Yes.
are we likely to see the shilling
Depreciate.
giving up?
Yes. So two things. One, of course, is if more FDIs, if more hard currency leaves the country, and that's from the sell-off and every closure of investments. So we are going to see that impacting the currency going forward.
Going to be pressure.
There's definitely going to be pressure.
Yes.
Two is, again, how this COVID-19 unfolds here. If it becomes more severe, of course, you're going to see pressure. It has bringing some pressure in the currency when you're trying to bring in.
With the yields especially also going down.
With the yields especially going down. So there's some serious risks to the currency. That's why we were talking about people now shifting to hard currency.
Hard currency.
Yes, for safety.
For safety.
Yeah.
For safety. Wow.
Yeah.
$217 trillion.
Correct. Wiped out
across the globe.
Correct.
From investors. That's a serious haircut on investors.
Proper haircut.
Again, confirming investors should care.
Should care.
should care.
It is the time, yes.
Okay, we take a pause here.
All right.
Then we continue from here. Thank you very much. Please subscribe again. If you are not yet one of our followers and you get to know more about how this COVID is affecting our markets and investors' value. Thank you.